Good morning, ladies and gentlemen. Welcome to the show. Glad to have you guys here on this Tuesday, the 13th of April, 2021. You know, an awful lot of you guys been getting the stimmy checks and stuff. And you've been going out and paying off debt, you know, or whatever. Maybe you got a bad washing machine in your house, or maybe and you've been looking at the washing machines, thinking about buying a new washing machine because yours doesn't work right, or stuff like that. Well, I'm going to tell you guys what. It's going to get easier and easier to pay off debt as we move into this hyperinflation. But you better get your debts paid off before the hyperinflation ends. And yes, I did say hyperinflation ends. There's going to be a point where they have to do what's called a reset. It comes near the end of the hyperinflation. And, the banks, they don't like to lose. You owe them money. What they'll probably do, I can't say for sure because, I mean, we've never been through a worldwide hyperinflation before. It's uncharted territory. But most likely, I mean, there'll probably be a new currency will come along at the end of the hyperinflation during a reset period. And that new currency will have a lot of purchasing power. It is a possibility. I'm not going to say it's absolute that this will happen, but there is a possibility at the end of the hyperinflation when they do the reset that everything will be transferred over into the new currency that'll have purchasing power from the old currency. Well, basically, maybe it'll look like this: old dollars, new dollars. The new dollars can buy something, and the old dollars can't buy much of anything. Well, anybody considered the possibility that the banks out there, the money that you owe them or whatever, your debts to them, that they might just transfer them over from the old dollars into the new dollars? So one day before the reset, maybe you owe 10,000, for instance, or whatever. And one day before the reset, that 10,000 is almost nothing. And then the next day it becomes something when they transfer it over into the new currency. Then it becomes very difficult to pay off. So during the hyperinflation, the government is going to be using this hidden tax of inflation to help pay off their debts, to help pay all of their unfunded liabilities. They'll pay all their unfunded liabilities in worthless currency. And this is like a get out of jail free card for their debts, the enormous debt of the country. I mean, right now, what is it? Like $28 trillion? And that's an enormous amount when you weigh it in the currency that's not counting their unfunded liabilities too. But that's an enormous burden of debt when you consider what the purchasing power of a dollar is right at this moment. But you chop that purchasing power in half, it's like chopping the debt in half. You chop the purchasing power in half again, and it's like chopping the debt in half again for the government. It means that they're going to pay all of their unfunded liabilities, and they're going to pay their debt and everything that they owe. They're going to pay all their employees. They're going to pay everyone. But what are those dollars going to buy when it takes a wheelbarrow full of them to purchase a loaf of bread? And during that period in time, this gives you an ability to pay off your debts because wages are going to go up. I don't think they're going to go up and keep up with the amount of inflation. I don't think they're going to go up fast enough, but they are going to go up. And it's basically your dollar's purchasing power is what you have to look at, not the dollar itself. How much does it purchase? So maybe a year from now, a dollar will only purchase 1/100th of what it'll purchase now. So say you need a new washing machine right now, right? You're only going to pay more for it, like 4, 5, 6 months from now, and they're going to be harder to find one. because people start spending. The velocity of money is going. I'm expecting this summer, moving into this fall, for the velocity of money to go through the roof. People are going to be spending money like crazy. Inventories are going to just disappear. So there's all this money out there and nothing to buy. So if you need something, you know, I'm not telling you guys to go out and buy it right now. I'm just saying that it might be a good idea to think about, hey, if you need something, it might be a time to think about making a purchase, or thinking about, because you're going to find that maybe 2 or 3 months from now, the price is going to be considerably higher on everything. Now, that thing you bought 2 or 3 months from now, that might be selling used for what you paid new right now, 2 or 3 months from now. Doesn't matter if it's a car, washing machine, doesn't matter what it is. A few months from now, they might be selling used for more than you pay new. The same phenomenon happened. I heard a story. Anyway, the story was about in Germany during the hyperinflation. And a fellow bought a bottle of wine that evening. And glass is worth money. An empty bottle is worth money. The next morning, the empty bottle was worth as much as the expensive wine was the night before. The inflation was moving that fast, and it can move that fast. It can like in 24 hours, you can lose 50% of your purchasing power when you're in the middle of a hyperinflation. And that's getting toward the point then, when it gets that bad, it's getting toward the point when they're ready to do a reset. And basically bring along this new currency. Out goes the old currency, in comes the new. So you got to be careful of banks during a period like that. They might want to try to just transfer your debts over from the new currency, from the old currency to the new currency, and then you get stuck with the saddle with those new debts you can't ever possibly pay. Pay them off. Pay your debts off before the hyperinflation ends. And you say, well, when's this hyperinflation going to start? Well, we're going into what's called the acceleration phase right now. We're not in the hyperinflation yet. I know you see these shows on YouTube and guys come out and say, hey, we're in the hyperinflation. Hyperinflation is here. Big headline. Hyperinflation. No, hyperinflation's not here yet. We're going into the acceleration phase. That's the initial phase before the hyperinflation, where you see 1970s style inflation. Or maybe even worse than 1970s style inflation. You see prices going up, but it's not panicking sort of a thing. They're just going up, like, That's it. That's the part that makes people lose confidence. They see the prices going up. They go in for a pair of shoes, and last month they were $19.97 for a pair of Chinese-made shoes in the store, and they go in next month and they're $29.97. That's what we're seeing right now, and that's called the acceleration phase. And that's when people start getting the idea that I'm telling you right now, to go out and buy it now before it gets higher. People start to see that, and they start to realize this. Let's get into the markets. Let's open up the charts right here and take a look at what's going on. We're seeing the silver price finally lifting off a little bit. It's up 56 cents today. The problem with this has been, tell you what the problem with this has been. We see it go up 50 cents or whatever one day. And then the next day it'll fall like 25 cents, and then the next day fall 25 cents, and you're right back where you started again. This is what frustrates me about gold and silver, is it'll take a step up, or 2 steps up, and then it'll take 1 or 2 steps back down again. And it just frustrates the heck out of me to watch it doing this, I'm sure it frustrates you guys too, but so silver today is $25.34. Let's take a look at gold. And gold is at $17.43. It's up $10.70 today so far. Now let's take a look at crypto. Now what crypto's been doing is it's been going up and staying up. We're looking, and how long did it take it to get through the first $1 trillion in the market industry of crypto? It took it ages. It took it like all those years between 2009 all the way up to like 2019. It took it all those, no, 2020. No, it was this year, wasn't it? 2021. Took it all those years. But once it made that first trillion, now it's made it through the second trillion, and now it's $167 billion into the third trillion, just in the last day or so. I mean, she's moving. She is moving. Uh, it's over 2 trillion. It's heading for 3 trillion, guys. Heading for $3 trillion. It'll soon become too big to fail. They won't be able to touch it. I figure once it passes that $3 trillion mark, or $4 trillion mark, if they try to crush it, it would be so much money involved that it would take down the financial system once it grows to a certain point. I don't know exactly what that point would be. Maybe 4 trillion, maybe 3 trillion. You know, once it gets up around 3 trillion, it's getting up into that zone. It's called too big to fail. Then they have to leave it alone, because if they take it down, they take down everything. You just can't have that amount of capital be destroyed within the system suddenly without the whole system starting to go bonkers. You know, it's getting too rooted. Bitcoin, the cryptos are getting too rooted in the world's financial system within the big players. Big players got large amounts of it. It gets too rooted like that, and you know, it's become integral. It's become a part of the financial system that can't be removed once it gets to a certain size. And it becomes too big to fail. It's like a huge bank. If a huge bank like Deutsche Bank were to go down, it's the same deal. And so cryptocurrency now is getting into that area. Well, Bitcoin's at 62,910. It's up almost $3,000 since yesterday. About $3,000 higher since yesterday. Look at them go, the cryptos. It's amazing. This is absolutely amazing. All your top coins seem to be going up and up and up, you know. Anyway, let's take a look now at the Dow Jones Industrial Average, which is down today, 139 points. I'm thinking it possibly could make a recovery before the end of the day even. There's just so much money out there right now, you know, and there's going to be a lot more. Modern monetary theory has really finding its own now, you know, and they think for some reason they think that they can ignore what's happened in history. Whenever a country has come out and they've just printed money willy-nilly, it's always ended in hyperinflation. But somehow they think that this time's going to be different. This time they can print all they want and they got control over inflation. Boulder Dash. Okay, let's take a look now at crude oil. $60.22. It's up 52 cents on the day. Let's take a look at the MOVE index going along sideways. It's really kind of quiet out there today, you know. But that's the quiet before the storm, guys. It's the quiet before the storm. Bonds and rates today, we're looking at falling yields. We're looking at 1.66 on the U.S. 10-year, and the U.S. 30-year, we're looking at 2.34. And we're looking at the yields falling, not significantly, but on the U.S. 10-year, it looks like they're falling about, what is it, 1.4 basis points? My glasses are all fogged up. Okay, U.S. dollar index today, 91.66, and it's falling off. No, 91.99, I should say. Not 91.66, 91.99. Sometimes I can be a little bit dyslexic. You get those two nines there, and somehow my brain reversed them into two sixes. You know, instead of 91.99, that's 91.66. I think they call that dyslexia, when your brain reverses things on you. Or twists them upside down. It's like a mirror image. You ever seen the ambulance, you know? You got an ambulance in behind you. and you look in your rearview mirror and it says ambulance. But if you look at that ambulance sign in real life, like not through a mirror, it's all backwards. You know? Anyway, listen, thanks guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.